So what is your line of sight currently? I don't know what's the latest writing in that book which may have happened, but what is your line of sight based on what you've just told us from an investing parlance, let's say for the 6, 9, 12 months? Because now I believe, and you, while you run a mutual fund, have a keen eye out for gold, for crypto, for everything, right? So tell us a bit about that.
So if you see, like last few months, we have been writing, like 2 months back, we talked about in our fact sheet, in our write-up, where we said that US, China is in trouble, emerging market is in a better position, and India is in a good situation. So if you really look at the way I look at absolute terms, one has to look at the market, but I think in the today's context, relative is more important. We think from a global perspective now, even US investors believe that India is a much safer place in the current turmoil. And that's the reason, if you really understand the liquidity flow aspect, when you look at any of the liquidity indicators we track or we build, we are seeing that money is actually shifting from US market. The Europeans are pulling out money. Even Japanese investors have pulled out. China anyway is pulling out continuously. So we are in a phase where cross-border flow, which was extraordinary in US in last few years, that cycle has peaked out. Okay, and when we say that cycle has peaked down, if I combine with the risk appetite cycle is also peaked out, which clearly means money will shift from high risk to low risk environment, which clearly means that Asia-centric emerging market will attract flows, and that will lead to a decoupling process. This is what we have written 2 months back, that India decoupling process has begun. Okay, from US market, or even I'll say even from the developed market cycle, India will gradually get decoupled, and this is something which we are harping on it, that India is relatively safe place. India remain buy on dips. If you look at rest of the people who were thinking that small cap will collapse, mid caps will collapse, and most of the family office, HNI virtually has given it at the bottom of the cycle. Now look at the vengeance they have come back. So I think we have to understand that something has changed for India. This is something which we explain through a perception analytic, that India perception is changing and is changed from longer term perspective. That's the reason I always say India is expensive. India will remain expensive from a longer term perspective. If you ask me longer term perspective, it can be over 3 decades. That's the longer term perspective. So you're talking about a 3 decades opportunity. Okay, even you discount that also, then we are talking about longer term cycle which is in your favor. So that clearly endorses our larger thinking that India remains buy on dip. Now every opportunity we have to participate. If you really talk about let's say gold perspective, okay, uh, though we have been very constructive in our book, we have written that October, November 2024, gold will see unprecedented bull run. And this was written in 2019, and we have seen how beautifully it has played out. And very recently, we have said that 3,500 levels gold has peaked out from a medium term perspective. We expect 10 to 12% correction, and simultaneously, we talked about crude rallying 10 to 12%, which has already happened. Okay, so crude has already recovered 10-12% from the recent bottom. So I think what is very important to look for a larger perspective. Also, we have to keep back of the mind, but you also have to identify these near-term and medium-term inflection points also to try to trade better. Let me give you a small example. Now, in our multi-cap fund, we have to maintain 10% the precious metal exposure. So what we did, since we have to maintain, and don't have too many options, so we can't sell. We tuned down significantly, but we shifted from gold to silver. So as of now, we have 100% exposure of the precious metal in silver, not in gold, and that thesis played out well for us in last 2 months or so. So I think these are the small things actually helps you in generating alpha and protecting your downside. And this is something I always say, that macro is very important. People tend to ignore in this country about macro. People say I'm a bottom up guy. How does matter what happens to crypto, what happens to gold, or what happens to yield? I'm focusing only the earnings of the cycles and the P expansion of sitting in India. I think that's a myth. Okay, because if the larger perspective that asset class is not in your favor, you may relatively do better, but in absolute terms, you will actually generate negative alpha. But coming back to the global macro perspective and other thesis which we also talked about, India is still in a risk-on environment. Right from January, we said that India is a mild risk on, and March we said is a proper risk on. We are still not saying is an aggressive risk on. Okay, It's a proper risk on environment, and globally still a risk off phase. So India started our risk off phase in July 2024, and we were very early to talk about that phase, and we actually changed our portfolio, and in between we underperformed also. What is more important to understand is that you have, in the business of risk, you have to be ahead of the curve. Okay, like in January we spotted US risk off cycle and say US market has peaked out from a risk perspective, and technology stock, particularly Nasdaq, we talked about, will has potential to correct 15 to 20%. It did correct it. That is come back. That's a different issue. Okay, what is important for us to understand, if you can identify these inflection point and can capitalize, though it is very difficult that everybody get everything right. We also say we 28% time we don't get it right, but 72% time we get it right, and that itself is a very good number. So macro really gives us the background. Let's say talk about how many people were bullish on in the beginning of March. People are worried. People are still worried. The market has rallied significantly. This is the way we classic behavior. When you convert these behavior thesis, also people have actually capitulated. Short buildup was very, very large. Okay, risk appetite has bottoming out. Liquidity was rising. The perfect background was there in the beginning March for a pullback rally, and which has played out very well so far for us.